Hi everyone, welcome to another honeystocks.com weekend analysis. This one's going to be going out on Saturday the 26th of March. Now I just want to take the opportunity to thank everybody just before I dive into all my charts, walk you through the market, some of the individual stocks that I think you can add to your radar. I received a lot of emails, Twitter messages, etc. after the work that I've been putting out over the last couple of weeks. It's greatly appreciated. For those of you that like to fight uptrends and get nasty with emails, thank you for your participation as well. But I think in all seriousness, the market has been on a rocket ship, especially a lot of the technology names over the last 10 days, and it's very, very welcome here in Scotland. And I'm getting asked a lot of questions about, I guess, a lot of the names that I've been covering over the last couple of weeks. So as usual, I have a broader market analysis for you. I have around 20 individual stocks that I think you can add to your radar. Some stocks have already broken out, probably due for a little bit of a pullback. Stocks don't go up forever, despite what some of you might think. So the philosophy that I have is really geared towards the mid-term approach. I'm not a day trader. I couldn't think of anything worse. So my time horizon is generally weeks to months. So I think if your time horizon matches mine, you'll probably get a lot of value from the work that I put out there. I'm told that the work that I put out there is very, very logical and easy to understand. I don't overcomplicate my analysis, and I hope you appreciate it. So let's dive into the charts. Let's see what the market's telling us, and hopefully the market continues higher. Now, as always, before I get into this, please do pause the video, make sure you're comfortable with that. There's not any investment advice. Don't be silly. Please do all your own due diligence. Just to give myself a little bit of credibility, I'm working my way towards my CMT, technical analysis. It's something that I'm widely known for in professional circles. If you missed last week's social media analysis, these were the stocks covered, and this is the performance of the stocks. There are 3 or 4, I think, stocks that were not actionable, but something to point out with Shopify, it was, in my opinion, not a 13.5% decline, because if you're familiar with what went on the week previously with the massive spike in the last minute of trading, it's had a pretty flat week in my view. But as you can see, lots of names that have done very, very well over the last week. And with my work, I'm very much aware that it's a case of what have you done for me lately. I think being on top of the market declines is probably a good start. This is back in November, highlighting the failed breakout in the small caps. 3rd of January, starting to see valuation resets. The S&P 500 on the 5th of January put in another failed breakout. So I've been on top of the declines, and of course, if you want to go all the way back to the crash of 2020, on my website, the analysis that was presented to our clients 10 days before the market crashed is up on the website, and I think there's probably a lot of learning to be had for those of you that are looking for a few clues on how to read the broader market. So if you get some value from this, as always, please hit the like, subscribe. It all helps with the algorithms, and it lets you know that you like the content, and maybe do them a bit more often if I have the time. So let's start off with the broader market. Now, I'm not going to spend too much talking about the broader market. I don't see much point, because a lot of the levels that I've been monitoring and already talked about, we've had significant bounces to the upside already. But this is, in my opinion, the most important chart in finance at the moment. This is the small caps. So for those of you that maybe don't have the understanding of the major indices, there's 4 major indices that I like to monitor. Small caps, the S&P, the Dow, and the triple Qs. What I tend to observe is when you get failed moves in one index, it can drag the other indexes along for a ride. So what I'm looking at here is the Russell 2000 small caps, and this for me is a good chart that helps me gauge whether it's a risk on environment or risk off. Now, obviously, we know that when the small caps broke down at the end of last year, we've seen massive declines across the board. You know, we're talking 60, 70, 80% declines in some of the small cap names. Now, since then, they have been chopping about sideways in this sideways range. Now, I view this as quite a significant level in the small caps. If we break out higher, that tells me that the market will likely be a very risk-on environment. Now, what I also understand is the other side of the equation. We have, you know, the Russia-Ukraine thing. We've got economic turmoil everywhere. I completely understand that, and of course, I have the same mental hurdles when I'm presenting my charts as I'm sure many of you have listening. But one thing that I guess the market crash of 2020 taught me was that the stock market isn't the economy. They are two completely different entities, so you have to treat them differently. Now, in my world, if the small caps break out above this significant level, despite what we're seeing across the world, for me, that's a risk-on environment for stocks. We've already seen the NASDAQ composite rebound spectacularly from the levels that I highlighted in the last few weeks, and we've had some major moves in the NASDAQ. Same with the S&P 500. Rebound from very logical levels in my world. We've got the Dow doing exactly the same, and of course we've got the triple Q chart. Now, I walked through this one last week, just highlighting that we'd in the last 13 years since the 08 crash, we had never reached oversold conditions on the weekly chart, and for a rebound to be reasonably within striking distance. Now, of course, that has played out. Now, we've also got consumer discretionary relative to staples. Again, this is one of the charts that I used in order to get risk on a couple of weeks ago, and of course communicate this to my clients, members, etc. So that's a very useful chart. I would suggest that it's a chart that if you're into technical analysis in any way or reading the market, the consumer discretionary relative to staples is a very useful chart. And of course, we've got the dollar index at the moment, which is just consolidating nicely before what I would expect to be some kind of breakout from that kind of setup. Now, I have, as always, around 25 individual charts. Now, I walked through many of these charts last week. I've had lots and lots of messages and emails because some of the moves have been ridiculous. I think many are wondering how to manage positions, and of course, if there's any disclosures that I need to make regarding existing positions that I own or any recommendations that I've made to our clients over the last 10 days, then of course I will do so. Now, we'll kick it off with Deere & Company. Now, this is a disclosure. I own Deere & Company. And this has been a recommendation, one of our high conviction names, and of course it's off and running. It's broke out above the $400 level. I have an upper target there of 580. Now, of course, I have no clue whether or not it will actually reach 580. I believe in risk management, and what risk management often means is using things like trailing stop losses or moving averages to just help you manage the position and extract as much profit as possible from the trade. So Deere & Company, again, it's a chart that I like very much. I try not to overcomplicate it. I'm looking for these big 9-month consolidation breakouts above key levels. I'm looking for support levels. I'm looking at stocks like Meta. Of course, for those of you that follow me on social media, you'll know that over the last 6 weeks, this has been a chart that I've posted quite a few times now, and it's very close to resolution, hopefully to the upside, because I have been caught out, unfortunately, with Meta and the massive earnings gap down. So I am currently dollar cost averaging into this, and above 224. If we can get a confirmed breakout above 224, for me it makes a lot of sense, especially if you're in one of these camps that you like to buy significant discounts on big good companies. Of course, I don't like Mark Zuckerberg. I don't think there's many that do, but I understand it's one of the best companies on earth, and above 224 is the level. Boston Scientific hasn't broken out, but it's very, very close. I like it above $47. I don't mind stocks that are breaking out of bases dating back 20 years. We've got Zoom video. I think with Zoom video communications, I think above 108 makes a lot of sense. It has broken out above its 20-day simple moving average. It has pulled back in the last couple of days, but that's okay given the move that it's had. I think as long as that 20-day simple moving average holds firm, then I think the path of least resistance is probably higher. Now, I did mention last week that doesn't mean that I expect Zoom to go back, to $570. It's probably not going to go that far, but if you apply something like a trailing stop, you can just stay in it and see how far it goes, and ultimately you'll be stopped out when the market tells you to get out. I think with Nvidia, it makes a lot of sense. I think most of us have probably got exposure to Nvidia at some point. I own plenty of Nvidia, and I highlighted again the importance of just tools like the 50-week simple moving average. This has been recommended again to our clients on these levels, and of course it's doing very, very well at the moment. So the expectation is that if Nvidia, especially on the news this week regarding their new chips, I think if it can get to previous highs, 345-ish, that would be a minimum target for me. I covered CF Industries last week. I also put this out to our clients this week as well on a breakout above $100. Now, of course, it's ripped to 110. It's up 9-10% in the space of a few days, which is lovely. So I think with something like CF Holdings, I would actually switch it to the daily chart, and generally I will look for oversold, overbought conditions on the daily chart rather than the weekly chart. So I think with CF Industries, yes, it's pretty normal to get a pullback for a couple of days, but I think as long as we get a pullback and that $100 level holds, then I think that's probably a pullback that you might want to consider. AbbVie, I covered this one last week as well, and it is now very, very close to our target. I know that there's certainly some of our clients that are now starting to book profits on this. So I think AbbVie, if it can get above 165, then of course that brings up higher Fibonacci levels. I know there's some of you that maybe don't understand Fibonacci and how it works. I probably still don't understand how it works. The market seems to just respect the levels. I don't know why. Maybe algorithms, who knows. But certainly 165 is the level. AMD, I covered this one last week as well. I think it's had a breakout, and if you are in the camp that semiconductors are about to move off back into the sunset, led by the likes of Nvidia, maybe Taiwan Semiconductors is close to putting in a bottom, then you would expect AMD to potentially go along for a ride. I think with copper, this chart got a lot of attention last week. The copper miners, the copper names, of course, doing very, very well at the moment. That brings in Freeport-McMoRan. Disclosure, this has been recommended to our clients and members already. I think it was 45-ish. I own it, got options. It's broke out above $50. That's a significant round number in my world. I know the psychological numbers do have some merit. So our message to clients this week now is this is a potential opportunity to compound, which means add to a winning position. I don't tend to like dollar cost averaging down. I prefer to dollar cost average up. And I think above $50 makes a lot of sense. Apple, I did not expect this. I put this chart out last week just highlighting the positive divergence, and of course what's happened is it's ripped higher. So ultimately Apple's on its way to test previous all-time highs. I think the levels to kind of watch here around 182-ish makes a lot of sense, and we'll see what happens there. Netflix, again, positive bullish divergence. Now, I touched on this last week, and what I essentially said with Netflix is it's in a downtrend. We can clearly see that with a downward sloping 50-day simple moving average. But that said, when we have these positive divergences, it doesn't automatically mean that the market or a stock has found its bottom. I think you probably only need to look at something like Alibaba over the last 2 years, and you can go and have a look and see how many times that has put in a positive divergence and faked everybody into it, and then ultimately it runs into these moving averages, and then it just declines further. So if you are somebody that likes to pick up bottoms, or you're looking for these divergences, for me personally, it makes a lot of sense, and it's very, very logical to manage risk. So always have some kind of stop loss in place, whether you choose to place it below significant lows, or maybe you want to place it below lows of the day, depending on how far you're comfortable with your risk getting away from you. It's something to be aware of. So I think if Netflix can get above its 50-day simple moving average, which is a significant level for a lot of stocks, if it can get above that level, I think there's a case to be made that Netflix is probably bottoming. I covered Travelers Company last week. Again, it's one of those where I think you just have to have some sort of process in place that will eventually take you out the trade. Ultimately, I see this going to test the $200 level, which psychological round number. We are in an overbought condition, but that doesn't mean that it can't stay overbought. That's something to be aware of. But certainly Travelers Company has done very, very well over the last week. Congrats anybody that bought in. Antero Resources, again, I covered this one last week. This has been a chart that I've been covering for our members and clients since December 2020. That's the chart that I put out to them on this breakout here at $5. Now I have condensed this chart to the weekly chart just to make it a lot easier to read. But what this thing does is it just puts in base breakout after base breakout. It's aligned with the natural gas space. So of course the whole Russia-Ukraine thing comes into the equation. That's why it is currently ripping at the moment. But make no mistake about it, it's up 500% in the last 14 months. So it's got a massive ceiling on this. I could see this going a lot higher, but of course it's going to pull back, put in these bases along the way. Microsoft, again, very, very similar to the likes of Apple. It's put in the positive bullish divergence. It's now starting to push against its 200-day simple moving average. If there is follow through on this on Monday or Tuesday, I would be in the camp that we're putting in a base bottom in Microsoft. Micron Technology is still chopping about in its sideways range. Ultimately, I think if it's above $65, I think it's a buy. Ultimately, I would expect us to put in some sort of double bottom, provided the market doesn't fall off a cliff. But that's the chart. We've got Halliburton, of course. Energy names have been ripping higher. This was put out to our members and clients on this breakout here, and of course it is doing superbly well. I think if you are going to continue to see these headlines, with the Russia-Ukraine conflict, etc., especially if you look at what's happening in Saudi Arabia, I think today with I think oil refineries getting missiled and stuff, that all lends weight to a bullish environment for oil names, energy names. It's just one of the things that I think you have to be willing to accept. It's, there's a school of thought out there that you don't like to profit from things like war and stuff, and I totally get it. But ultimately, we're here to identify stocks that are in uptrends that you can buy lower and sell higher. Halliburton might be in that camp. United States Steel, the thing just doesn't want to stop. This was put out on the 31st of January, and of course, again, it's absolutely ripping higher. Again, the importance of having some kind of risk management strategy. For me, I like a trailing stop loss. I have very specific parameters for this. It's not any coincidence to me that it bounces off these levels. So this is one of the tools that I like to use that keeps you in a position for longer. And of course, with United States Steel, got many happy clients and members. It's up 87% in the last month. Can't argue with that. JP Morgan, again, potentially put it in some kind of bottom, just patiently waiting here for a breakout above 144. ARC, now, I think something to say with a couple of names that of course, I'm going to be covering here. And I think with some of the names, there's a controversial aspect to it because they're, areas of the market that many love or hate. Now, I tend to get a lot of nasty emails when I cover a couple of names, and ARC is one of them. Now, I think it's maybe down to, there's many of you that have maybe been dollar cost averaging down on this, or there's many of you that hate Cathy Wood. Whatever your deal is, don't send me an email about it. But what I would say is it's putting in a failed breakdown in my world. Now, that doesn't mean that it's going to rip higher, and like I've touched on before, it doesn't mean it's going to go and hit all-time highs. But what it does mean is that you can have some kind of mean reversion. Now, whether you choose to trade that or whether you want to invest it, there's an opportunity there. In the same way that Facebook is an opportunity. I think as long as ARC is above $61, I think you can probably own it. But like I said before, it can run into these moving averages and it can decline hard. I don't know what will happen next. I'm just looking for risk to reward propositions. ARC is one of those names. I think Tesla's the other one that everybody hates. But again, Shopify, failed breakdown. It's declined 71% from its previous highs. I think there's solid fundamentals behind it. Failed breakdown. And of course, I think as long as it's above $600, I think the path of least resistance is higher. But I am very aware of the 50-day simple moving average. I have recommended this one to our clients at 600, and of course, it's off to a great start. But ultimately, we'll see how far it wants to go. Again, one of the calls I made 10 days ago on the cloud computing, the Sky ETF, looks to be playing out, highlighting that the 200-week simple moving average tends to be a decent buy point. That's ultimately played out again. So I hope that a lot of the cloud computing names, especially names that maybe some of you own, start to put in bottoms. I think Taiwan Semiconductors makes a lot of sense. I think if we start to move back into this range, you'd certainly be hoping for a move. Will it do something like United States Steel? Probably not, but it's one of those that, when we get these breakdowns, that rather than look to actively short something or take, puts on something, I much prefer just waiting, a week or two and then add it to your watch list for a potential failed breakdown. It's something that I actively look for in my charts because I know that with failed moves, you oftentimes get fast moves going in the opposite direction, and that's certainly what I'd be hoping for there with TSM. I covered QCOM last week as well. It's obviously doing very well. It's now filled the gap. It's now consolidating above its 200-day simple moving average. Again, I think there's solid fundamentals there, reasonable PE, decent earnings growth. So I think with QCOM, it probably makes a lot of sense. Thank you. I had lots of messages on Twitter and a couple of emails on this week. I know after last week's analysis, there's a few of you that bought into this as well. Again, covered, I own plenty as well, I should say. But certainly I'm hoping for an upside target here of around 41, 42. I would hope that this goes and tests last year's highs, and then hopefully it's a big base breakout from there. BA, I think there's still a descending trend line. I know that there was an air crash in China which hit the stock overnight last week, but ultimately it's no real change in the chart. I think it probably needs to break out here from this trend line, which, as the chart can demonstrate, is a significant level for the stock. Goldman Sachs is in a sideways range. I think certainly with range bound plays, there's not any secret sauce to it. There's not any magical science to it. You simply buy at the bottom and sell at the top. Ultimately, I guess the other thing to say is that if you do buy at the bottom, it's very, very easy to manage risk. You don't need to take any massive chances. So you've generally got a great risk to reward proposition. And if the stock then puts in a bottom and then breaks out higher, you've got an opportunity then to start building a position. And I think with Goldman Sachs, it's at the lower end of a range. It's obviously a great company. So I think it might make a lot of sense. Again, thanks to many of you. A lot of you got in on this one last week. I broke out at 15.50. Again, disclosure, but it's had a massive move. The stock can't sustain this type of move. I don't think. The RSI now is up at 85. So in my world, it is now reasonable to expect some kind of pullback. Coles Corp makes a lot of sense. I think big base breakout, looking for above $65. We've got Lam Research. For me, this is showing that there's a decent support level in place for the stock. It's had a half decent week above 465. I like it. Tesla, like I said, I got a lot of heat after my bullish call on Tesla last week. I think it ended up being up 10%. So so this is the chart. Now, I of course have no clue whether or not this is ultimately going to play out, but it makes sense to me because I look for these technical things. But I think that the key message here is that it's going to pull back, it's going to go up, it's going to go down. But ultimately, there's a target there, I think, of about 1,200. I think if it moves another, 15, 20%, I think that's a level where you might want to consider profits and then just either buy it on a pullback or wait for a breakout there. But either way, I know the Tesla valuations, etc., are ridiculous, and there's many of you that hate it. But I try not to fight uptrends, and I think we're probably building some kind of base there with Tesla. Now, there's a few charts that I'm about to walk through that were featured in the chart report this week, which is one of the biggest online technical analysis. Don't know if you'd call it a magazine or newsletter, but my work was featured there, and I wanted to share a few of these charts that were featured. I think I put out a blog last week on cryptocurrencies and just highlighting the levels that I think are quite significant. So for those of you that like to trade crypto, but before I get into those charts, just quickly hit the like button. You're probably getting some value from this if you're stuck around this long, so please hit the like button. It's the minimum that you can do. So this is my chart for Bitcoin. I think Bitcoin tends to put in these little mini bases before moving higher. Now, this is a weekly chart, just so I can condense the data. And I think if Bitcoin might happen this weekend, if it can get above the $45,000 level, I think there's every chance that that's the level where we get some significant upside momentum coming in. Same with Ethereum. This was my trend line, highlighted this one a couple of weeks ago. It's broke out and now it seems to be moving higher. So if we have an environment where we have the likes of Bitcoin breaking out, you would expect Ethereum to get taken along for a ride. But one of the biggest digital assets that is showing the biggest relative strength at the moment is certainly Luna. Has been an absolute incredible rock star. It's been consolidating, I think, over the last 3-4 months, and I think there's every chance here that we're building a bit of a base before a big breakout. And I think if it can get above 105, which again, if it's an environment where Bitcoin is breaking out, I think Luna above 105 will make a lot of sense, and it will tick a lot of boxes, I'm sure, for many of you. So if you have had value from that, please hit the like button, hit subscribe. Let me know what your thoughts are on the market, what stocks are on your radar in the comments. I always like to read the comments and go back and forth with a few of you. But if you are somebody that's doesn't really get technical analysis, maybe you're just too busy to go through the market, maybe you hunt around social media, feel free to go and check out the website at honeystocks.com. Provide technical charting research membership, where provide every single weekend we provide our premium weekend analysis, premium charts, provide trade ideas, which I'll show you what that looks like in just a second. I provide a midweek halftime analysis every single Wednesday. I provide access to a wonderful trading community full of investors, traders, money managers, you name it. There's a wonderful community that I've built over the last few years. I provide daily charting support, weekly charting support, so if you are somebody that would like a second opinion on a chart, you can always bounce it off me. I have a very professional platform where you can just directly message me, and I generally have a response time of a few hours. And if you are in the process of maybe learning technical analysis and you'd like to learn how to chart, I also provide full access to my technical analysis program, which I'm told is very, very good. But at the moment, as you probably mostly know, got our spring offer. I put this out there last week. It ends on Monday. We're doing 20% off all of our memberships at the moment, so feel free to go and check that out. But just to show you what I guess trade alerts look like, this is a recent alert that went out for Shopify. I think I touched on that one already. This is a recent one for Freeport McMoran. Got Lithium Americas, which was massive last year as well. Cloudflare, massive. Square Inc. was massive. It actually hit the upper end of the range and target met. Zscaler was massive. Antero Resources, I've already touched on this one as well. I've been covering this one since this breakout at $5. Plug Power was massive. But I'm very, very unique in what I do with my high conviction alerts, which are the alerts that when I send out email alerts and notifications via my app, I record every single one of them on my website for complete and open transparency. So if you are interested in my work, go and check the types of charts that I recommend and the types of charts that you like to buy. I'm not in the business of pump and dumps or penny stocks. I'm looking for good quality stocks, good quality names. Recently I've got into fundamentals as well, so I'm always looking for good stocks with solid fundamentals behind them. And I've recorded every single alert that I've sent out over the last 3 years. So I think if you are somebody that has a mid-term approach, maybe you're looking weeks to months out, maybe you're looking to maybe get away from day trading, learn technical analysis, maybe you're just too busy and maybe you're hunting around social media, whatever your deal is, if you just want to be part of a community, then that's something that I provide with my work. So feel free to go and check out my website. But certainly, testimonials are there. I think certainly with this performance, there's certainly options involved, but this is one of my members, Dan. He's taken the account from that to that's yeah, he's quite happy. Sean is looking forward many years as a member. We've got Nick, member for life. We've got Rocco, guidance made each year, but he loves the community and of course the education. Vince, 2 years in a row, over 100%. Individual options, yeah, it's all there. I can't say it any more than what my members do. So if you've stuck around to the end here, thank you very much for watching and hope to welcome you soon. Thanks as always.